totally separate from Nadex. Nadex totally separate from Apex. We're not owned by each other or affiliated in any way. Nadex is the exchange. Apex, we're an online community of traders helping traders. I'll tell you a little more about us here in a minute. But let's get rolling tonight. We've got quite a bit to cover. Let's knock out our disclosures, get those out of the way so we can jump in here. Trading futures, options, or any financial instrument involves risk. It may not be suitable for every investor. Information contained in this webinar is for informational and educational purposes only, and not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex, and past performance not indicative of future results. So if you're brand new to Nadex, hop on over to nadex.com. You can go through and get some information here about the products that Nadex offers. Basically, Nadex offers two different products. They offer binary options and spreads. Okay, and you can go through each option here and get a little more information about those, and I'll show you where you can get some detailed education as well. If some of you have a live account with Nadex, some of you only have a demo account. But if you don't have a demo account, go here to the Trading tab, second one down, Demo Trading Platform. And if you don't have one of these, go ahead and sign up for one right now, even while we're on the webinar. It will greatly help you walk through with us tonight. I'm going to be referencing the Nadex demo platform quite a bit and showing you some charts. All you got to do is fill out a quick username, fill out some info, and hit submit. And in just a few moments, you will get an email with a temporary password. Nadex will give you a $25,000 free demo account. Okay, that way you can learn the platform, learn the layout, go through and get familiar with the different products that Nadex offers, as well as how to enter and exit orders, and so on. And any new strategies or systems you're testing out, you can do it in your Nadex demo account as opposed to using your live money. So last thing you want to do is test something new with live money. That's a very expensive way to educate yourself. Speaking of education, once you have your free demo account, hop on over to our website, apexinvesting.com. You can go right here to this button that says Join Free Now. Select a username and password. Once you have that, you can enter the site. This will give you free access to all of our education and step-by-step training courses, several free tools as well. For those of you that have been with us before, we've made a few adjustments to our website, cleaned it up a little bit, made it a little bit easier to navigate, especially with some of the top options up here. A lot of information on the site. Basically, I want to direct you to just a couple different places. Right here, weekly webinar calendar. If you click that, like I said, we do these webinars every Monday night for Nadex, as you see here. Feel free to join us anytime on those. You can sign up for those. We do some radio shows during the week and some other webinars as well, just covering strategies and systems, sometimes some live trades. So feel free to join us on there anytime. Any questions you might have, right here, this is a very important tool. We've moved this button around a little bit. If you have any questions whatsoever, you can hit us up on the online chat if we're there. Otherwise, you can just submit a help desk ticket. If you have any questions about Nadex or binaries or spreads or a particular strategy or system or anything, we can help you with it all there. And then right here under the Trading Questions Forum, I want to direct you there as well. And some good information. This webinar that we are covering, that we're on tonight, is being recorded, and I'm going to show you where that recording will be, as well as some past recordings. But if you get over to our forum here, got some great information here, some articles, different information about, trading psychology, risk management, and so on. But if you scroll down here to section 10, notice they're divided S7, S8, basically section 7, section 8. S10 is systems. You can see all of our different systems here that we use to trade, stocks, futures, Nadex spreads, Nadex binaries, step-by-step training courses on each of those, screenshots, written out rules, discussion back and forth between other traders of, what system they're trading, how they're doing. You can check all that out absolutely free. If you scroll down a little further, watch webinars here. Very important section. Right here, newest webinars. Tonight, after we get off this webinar, that is where the recording will be posted under newest webinars. And if you've missed the last few weeks here, you can go back and watch any of our webinars you'd like. Okay, as you see here, Nadex Monday webinars from January 11. I covered the ultimate hedge strategy. You can go back further, how to scalp with Nadex 5-minute binaries, choosing the right spread, choosing the right binaries. Binaries 101, Spreads 101, all kind of good information there for you to catch up on. And if you've missed anything, and you'll also see right here a whole section of just Nadex binary webinars, or a whole section of Nadex spread webinars, Nadex platform tutorials, how to use the platform, how to customize the platform, everything you need to know, just a whole library wealth of information there. Feel free to take advantage of that. So get yourself a free demo account with Nadex. Check out all the free education here about Nadex binaries and spreads, understanding them, choosing the right one, different ways to trade them, strategy systems, all available to you absolutely free. Okay, and while you're at it, hop on over to facebook.com/apexinvesting. Like us and follow us on Facebook. You'll get a lot of updates as far as any new charting, strategies, systems, great trades from our trade rooms, any news events that might be coming out that you need to be aware of, let you know of any new webinars coming out. So like us on Facebook, and once you do that, go up to the, once you've liked us on Facebook, just go in there and select be notified of all posts. Otherwise, you might not be notified of all the posts coming up. You might miss out, you know, on some new strategies or system, or might miss out on an upcoming webinar. But you can go through there and follow us, like us, keep updated on some good stuff there. Okay, so just a few places there where you can get some free education. Let's see here. Yehuda says I'm breaking up a little bit. Are we still coming through okay on audio? Anyone else having issues there? You might want to check your if you have any trouble there. Let's see here. All right, looks like I was breaking up, but cleared up now. Okay, looks like we should be all good then. Okay, so tonight, what we're covering tonight, we're going to talk tonight about different types of trading. All right, directional, reversal, scalp trading. There's so many different ways that you can trade. It all depends on whatever your particular strategy or system is. And we're not necessarily going to cover, you know, particular strategies or particular systems and entry rules and that tonight. There's a million different strategies out there. I just showed you where you can go to our website and check out all the different ones that we use ourselves over at Apex. You can go through there and check them out, see which one you like, what you prefer, what fits your particular trading personality, your trading style, or your account balance, your trading schedule, maybe your full-time, part-time. Tons of different strategies and systems you can look at there that I just showed you where to get info on. Some of you may have your own, but what we're going to talk about tonight is, I talk to a lot of people who are like, hey, I have this great strategy, I have this great system, but a lot of times I'll pick a binary and it doesn't work out. Even though, and I don't understand why it didn't work out, because the market kind of went in my direction, and what did I do wrong? And before you try to jump into charts and indicators and strategies and systems, and hey, John, let me ask you all these questions about with this strategy, when do we enter, and this system, what about this rule? Before you get ahead of yourself there, we have to start with, for one, making sure that you do understand how binaries work. For two, making sure that you are picking the right binary, okay? And you might have a great strategy and great system, but when you pick the wrong binary, it doesn't work out for you. And it doesn't, and you'll spend all this time trying to tweak your system and tweak your strategy and change your rules, but it really just boiled down to the fact that you weren't clear about picking the right binary. And so that's what we're going to talk about tonight, is making sure you understand why there are so many different binaries, why they're priced differently, and choosing the same one, or choosing the right one. And so we're going to talk a lot about, I'm going to show you the Nadex platform a lot, show you the options. We're going to actually, I've got some good PowerPoint here that we're going to go through, but I'm actually pull up some examples on the charts. If you guys have been with us for a while, over the last several weeks I've tried to do more and more of that, showing you examples on the chart, not just great little screenshots in PowerPoint, to really help it make more sense. And we're going to do that again tonight. So let's just do a quick review. We're not going to get real detailed in this. If you need, some more information about, if you're brand new and you're brand new to binaries, I showed you there where you can get some education on binaries and kind of binaries 101. But we are going to do a quick review of some of the basics of binaries, because that's going to help us understand kind of the next section we're going into here. So for some of you, this may be new, some of you may be a little elementary, but bear with me here for a few minutes while I cover some quick basics. Okay, so what are Nadex binaries? They're short-term, fast-moving contracts with only two possibilities at expiration. At expiration, a Nadex binary is either worth 0 or 100. Okay, well, what does binary mean? What is a binary? Well, it's simply a 0 or 1, true or false, yes or no statement. Okay, so let's put that into perspective. I'm going to bring over here the Nadex platform. Okay, and over here off to the side, you've got binary spread. These are all the different product options available. For our example tonight, because it's open, we're going to use Forex binaries. We're going to choose the euro dollar. And for right now, we're going to choose these right here. Well, let me refresh this. Let's go to Forex binaries, euro dollar. Let's look at these right here. These open up at 7 p.m. and they expire at 9 p.m. Okay, so let's see here. All of these different options right here. You see this? Euro dollar greater than 1.0928, greater than 1.0924, These different numbers here are called strike prices. Okay, these are different strike prices. Each one of these is a different binary contract. All right, and what is a binary contract? Well, if I click, let's just choose this one right here. If I click this one right here and I open up a ticket, what is this statement? This statement says that the euro dollar will be greater than 1.0888 by 9 p.m. tonight. Okay, it's 9 p.m. Eastern. Any time frames you see listed on the Nadex platform are Eastern time. That is a binary contract. All a binary option or binary contract, all it is simply a statement. And it's simply saying the euro dollar will be greater than 1.0888 at 9 p.m. Well, yes or no? Will it be greater than that? If you think yes, it'll be greater than that, then you want to buy it. Okay? You're saying that's a true statement. That will happen. Yes, I want to buy it. If you think no, the euro dollar will not be greater than 0888 by 9, I think that's a false statement. It won't happen. No, it won't happen. I want to sell it. Okay? That's simply it. A binary contract is yes or no. If you think the statement is true, you want to buy it. If you think it's false, you want to sell it. Okay? And again, each one of these is a different contract because it's a different statement with a different price. You might say, no, I don't think it'll be greater than this 0916, but I might think it'll be greater than 0880, so I want to buy that one, or I want to sell. You have different options to choose from based on where you think the market will or will not be by 9 p.m. Okay, so that is, in a nutshell, a binary contract. So let's kind of break it down a little bit more. So risk and reward. If you buy a Nadex binary, again, at expiration, okay, when the binary contract expires, at expiration, it's either worth 0 or it's worth 100. So if we buy one Nadex binary for $25, our maximum risk, the most that we can lose, is $25. Our maximum reward would be what? $75. Because if it expires and the statement did not happen, then it's worth 0, right? And we bought it for 25. That was the amount we put up to buy the contract, saying that the market will be above a certain level, and if it's not, then the contract's worth 0 and we lost the 25 bucks. If we are correct and expires worth 100, then our maximum reward is 75 bucks. So the amount that we buy a binary for is the amount we put at risk, and it's the amount of money that we have to put up out of our account in order to place the trade. And the difference between where we buy the binary where we buy the binary for, the difference of where we buy it for and $100 is the maximum that we can make. So let's look at another example on buying a binary. If we bought a binary for $75, well, $75 is our maximum risk. It's also the amount we have to put up out of our account to place the trade. If it expires true, well, then it's worth $100. So I bought it for $75. My maximum reward would be $25 because the most it can be worth is $100 at expiration. Let's look at the opposite. What if I don't think the statement is true? I don't think a market will expire above a certain level. I want to sell a binary. Well, it's kind of the opposite here a little bit. If I sell a Nadex binary at $75, then my risk is the difference of where I sold at 75 compared to 100. So if I'm selling at 75, my risk is $25, and the maximum amount I can make is $75. Okay? So when we're selling a binary, the amount you sell the binary for is the maximum amount that you can make. So if I sell it for 75, that's what I could make off of it, is $75. The difference of where I sell it and 100 is my maximum risk. So let's look at an example here. Let's say I sold a binary at $50. Well, the most I can make would be 50. The most I could lose would be 50. Okay? Now, let's look at a little different example here based on a Nadex ticket. So let's just look at this example here of the euro dollar. This particular binary contract, what is the contract? What is the binary? What is the statement? The statement is that the euro dollar will be greater than 1.3960 at 3 p.m. Okay, well, let's just say that I want to buy this contract because I'm saying, yes, I think this statement is true. I think the market will be greater than 1.3960. Well, then I want to buy it. Okay, and you can see right here on a Nadex ticket, when you buy something, it automatically tells you what's your maximum profit, what's your maximum loss. So if you're new or still learning, if you ever get confused on, wait a minute, if I buy, it's this, if I sell, it's it, it tells you exactly before you ever place an order. Okay, so now one key thing here to understand about binaries, all right, is what we call the midpoint. All right, and what is that? Pay close attention here. Well, this binary statement, what can I do? I can buy it for 85 or I can sell it for 79, right? So what is the midpoint? Well, if I took 85 and 79 and I added them together, it'd be 164. All right, these two prices added together, and I divided it by 2, it would come to $82, right? So $82 is kind of the midpoint between the buy and sell price. This price point tells us that right now at this second in time, it believes there's an 82% chance that this binary will close above the strike price. Okay, these prices are determined by where is the market in relation to this strike price. If we're saying that the market will expire above this, well, is the market already above that? And we're just saying we think it'll stay above it? Is the market way below it? Okay, and we'll talk about that more here in a few minutes. I'm going to give you some other examples. So in this particular example, if we were to buy this contract for 85 bucks, our maximum profit would be $15, or our maximum loss would be $85. Okay, so let's take a look here at a sell ticket. All right, what if I was going to sell this particular binary? Well, let's say I don't think the market will be greater than 1.3960. I think it'll be less than, so I want to sell it. I'm going to sell it for 82. Well, if I sell it for 82, the maximum profit I can make is 82. Because remember, on the sell side, whatever we sell for, that's our maximum reward. And our maximum loss or our maximum risk is the difference of where we sell compared to $100. Okay, so just remember on the buy side, the amount we buy it for is our risk, and wherever we buy compared to $100 is our reward. On the sell side, whatever we sell for, the price we sell for down to 0 is our maximum reward, and the price we sell for up to $100 is our maximum risk. Okay, so that's kind of a binary in a nutshell. Nadex offers binary contracts on stock indexes, Forex contracts, commodity futures, and economic events. Nadex has anything from 5-minute binaries, 20-minute binaries, intraday, daily, and weekly. There's all kind of binaries to choose from, 23 hours a day. And they're good for all markets. You can do long or short directional, you can straddle, scalp. There's so many different strategies and systems you can use for binaries, whether you're doing, news trade, spreads, iron, butterflies, a ton of different ones. Okay, so let me put all that I just said into a little bit clearer example here. Let's pull up the Nadex platform once again. Okay, so these particular euro-dollar binaries, we had some that were open at 6 p.m. and they expire at 8 p.m. Okay, as you see, those are still available. We had some new ones open up at 7 p.m. and those will expire at 9 p.m. So let's just take a look here. I want you to wrap your head around a couple of different things. Let's talk about, first of all, we talked about a binary being worth 0 or 100 at expiration. So for example, these right here, these expire at 9 p.m. We've got all these different contracts. So let's just say I chose this particular one right here and I wanted to buy it, and I wanted to buy one of them. Okay, so I placed the order. Okay, so I'm placing this order to buy this contract that expires at 9 p.m. Now, I can hold it till expiration, okay, or I can exit early. Now, that's kind of a foreign concept to, hold on a second here. Let me refresh this. Nadex has been working on their demo accounts a little bit here. Okay, so I just had to get that out of there and refresh. All right, so I bought that contract. Okay, by the way, guys, if you're having trouble if you're in your demo account, they're doing some work on demo. If you're in your demo account and you're having a message like that, or like an order's not showing up here, all you got to do is just hit Control-R, just refresh your screen, and it'll fix it for you. They're aware of it and they're working on that in their demo platform. Okay, so I bought this contract right here. See, I bought it and now it's in my open positions. Okay, it will expire at 9 p.m. I bought it for $51.75. And you can always see right here under position, it says +1, that means I bought. If it says -1, it would mean I sold. So I can hold this until 9 p.m. Obviously, I bought this because I think the market's going what? If I bought the binary, do I think the market will expire above here or below here if I bought it? Right, so I thought the market would be expiring above there. Now, where's the market right now? Well, you can see it right here under the indicative index, which is also, let me just pull it back up right here. So you need to make sure you understand what this is, okay? This is the Nadex indicative index. This is where the current market is. See this indicative index, or see this? So right now, the euro dollar is at 0.889 or 0.888 now, okay? Well, so when I bought this saying I think it would be above 0.888. Well, right now it's at 0.888, right? What if I were to buy one of these, or okay, let me just back up here before I get ahead of myself. So what happens if the market keeps going up and this binary that I bought for $51, The market's going up, so this binary starts going up in value. And let's say that it gets up to being worth $80. And yes, if I hold it, or let's say it gets up to being worth $90. Well, if I hold it longer, if I hold it all the way to expiration and it expires in the money, meaning it expires above this, it'll be worth $100, right? So I put up $51.75. What I'll get back is a full $100 minus fees, right? Well, what if I don't want to hold it all the way to expiration? Can I get out of it early? Yes, I can. I don't have to hold it to expiration. Okay, and I want to make sure everybody understands this. This is very unique to Nadex compared to most other, binary brokers or exchanges. Is yes, you can get out of it. So what if I bought it for 50 bucks, 51 bucks? It started going up, and then all of a sudden it was worth 80 bucks, and I wanted to just get out of it. That way I could just take what money I made and get out. Because I bought it for 51, now it's worth 80. I can get out and make 28, 29 bucks and get out. I don't have to hold it all the way to expiration, right? Okay, so if I buy something and it's going in my favor, I want to take my profit and run. I don't have to wait till expiration. I can get out of it early for whatever profit I've made. Now, what if I bought it and I was wrong? Because where's the market now? 0885. See, and look, now it shows me being down $18, right? Because it's going against me. I bought it, but the market's not going up or staying, it's going down. Well, if I bought it for $51.75, what is my max risk? What's the most I can lose on this trade if I held it all the way till expiration? Right, $51.75, right? My maximum risk is the amount I bought it for. But what if I bought this and then my charts turned around on me, my indicators turned around on me, everything turned around, and I was wrong. The market's not going up, it's going down. Do I have to just sit here till 9 p.m. and watch that whole $51 get lost? Do I just have to watch the whole thing just go away? No, because I can get out of it early, right? I can get out of it early if it's going in my favor or if it's going against me. So like right now, for example, the market has gone down, right? When I bought it, it was at 0888. Now it's at 0885. So let's say I'm looking at my chart saying, oh, market's going the other way. I'm already losing 21 bucks. And from what I can tell, the market's going to keep going the other way. So maybe I don't want to sit here and just take the whole $51 loss. Maybe I want to close it out now, just take a $19 or $20 loss, move on to the next trade, right? So how do I do that? Either way, whether I have it going in my favor or going against me, the contract is open. I bought it, right? If I just click this green button right here, click it once, boom, a ticket pops up. And where's the ticket? It's already marked sell. Because if I bought it and I want to get out of it, well, if I buy something, how do I get out of it? I got to sell it back, right? If I sell something and want to get out of it, I got to put it out to buy back. So all I have to do is, if I have this ticket open, if I have this order open already, I just got to click it. It's already marked sell, and I hit submit, and I sell the binary and get out of it. Okay? Now, how do I know what I can buy or sell it for? All right, did everybody see that? Do I need to do that again? So let's just go in here in a demo account. I'm just going to, sorry, I'm having to refresh this. All right, so let's say that I went in and I bought this one right here. So let's say I want to buy this one, okay? So I want to buy this contract. The market's moving on me a little bit here. Give me a second. Okay. So I bought it, right? If I want to sell it, all I got to do is click that It opens up a ticket already marked sell, and I sell it to get out of it. That's how you get out of an order quicker. Okay? So, look at the prices right here. Okay? Okay, Rachel brings up a question. She says, hey, okay, why when you sell it, does it say max loss 40? Because if I were to sell this, okay, hold on here, I'm sorry. If it were to be a brand new sell order, okay, it would be a certain amount, you know, whatever you're selling it for. So it's just showing that as the number, but that's not, I'm not actually entering a new sell order, Natasha. It's actually closing out this one. So when you're closing out an order, you don't have to pay attention to that. Does that make sense? Because if it was a brand new sell order, that would be your new, you know, risk or reward. But all you're doing is closing out an existing one. All right, and you can see right here. Let's take a look. So when I bought this one, I bought this one for how much? For $60, right? Well, what did I buy? I bought the 1.0884. So right here, 0884. I bought this contract. If I would have sold the contract, what could I sell it for right now? 51 or 50, 50, 51, right? So if I bought a contract, how do I know what I can sell it for? Well, I can sell it back for whatever price is listed right here. See, average price, I bought it for 60. The current market is 50-50. Notice this, 50-50, same as this. That's what I can get out of it for. So whether the price is going up or price is going down, I bought this contract. So what right now on the Nadex exchange can I sell that contract for? That price right there, which is this price right here. So how is my profit or loss determined? Well, very easy. It's determined of where I bought it, where I bought in compared to where I can get out right now. And that's this number right here. So whether I buy one of these contracts and I want to be able to get out of it, I can look and see what the price is I can get out of it at the time. Or if I sell the contract, what can I buy out of it for? What can I get out of it for? Does that make sense how that profit and loss there is determined? Okay. Does that make sense? Because some people say, hey, well, I bought it. Well, how do I know what I could sell it for? Well, if you bought one of these contracts, the 884s, right here, the 884s, right now, you can buy another one for that, or you can sell the one you're in for that. And that's how this number right here is determined. Okay? And so again, if I'm in an order and I want to get out of it, whether it's going for me or against me, I click it, it's already filled out, and I get out of it. Notice that? It's gone. So what goes back in my account when I do that? Well, the difference of where I bought to where I sold. I mean, that might either be profit or it might be loss, just depending on which way it was going. Okay? So does that make sense? Everybody understand how to do that? Whether you buy or sell, you can get out of it early. You don't have to hold it all the way till expiration. Now, this contract expires at 9 p.m. Now, you need to be aware of something called the dark zone. For example, you see right here on the offer side, like right here, we can buy this for 41 bucks or 40 bucks, and there's 50 contracts out there available. All right, or like, see all this? There's 50 contracts of these. Well, those are what's called market makers. You know, the market makers that are out there making these, or providing the liquidity of these contracts. So as long as there's contracts listed on the other side, you can always get out. Now, some of these, you know, most of these here are market makers. Now, some might be other Nadex traders as well, buying or selling. But there's something called a dark zone. And what that is, for example, on hourly binaries, these are these 2-hour binaries, like these here that expire at 9 p.m. 2 minutes before 9 p.m., meaning at 8:58, okay, the market makers pull their quotes, okay, right close to expiration there. You might have some quotes out there from other traders, But just with 2 minutes to go, you're not going to see the big, huge supply of contracts out there. So it might not always be easy to get out of your order with just 2 minutes to go. Okay, so a lot of the strategies or systems that we use, we almost always get out of contracts before those last 2 minutes. Now, some people were like, well, you bought something for 50 and it got up to 90 and you closed it out. But if you'd have just waited 2 more minutes, you could have made another 10 bucks. Why did you give up $10 of potential profit by not waiting 2 more minutes? Well, you know what? That's up to you if you want to do that. Sometimes the market might be so in your favor that you're not worried about it coming down. But let me ask you this. If you bought a binary for 50 bucks, it went up to being worth 90, and you could have just closed it out, made 40 bucks, and not worried about those last 2 minutes. Would you be pretty happy making 40 bucks? Probably so. But what happens if you bought it at 50, it went up to 90, and then boom, we went into the 2-minute dark zone and there were no contracts listed for you to be able to get out of that trade, and the market turns around. And in 2 minutes, it turns around quick and it comes all the way down below your strike and you can't get out. And you lost the 50 that you put up. Are you going to be pretty upset that you bought it at 50, it went up to 90, but you were so greedy about that last $10 in 2 minutes, you let it come all the way down against you and you lost everything? Yeah, I'd rather take my 40, be out of that dark zone area and be happy, right? Does that make sense? Everybody understand that? Now, I'm not going to tell you there's never a time that I've held something to expiration, because I have. Sometimes it's by accident because I didn't get out in time. Sometimes it's like, okay, the market's so far in my favor, I think it'll be okay, so I'm going to hold it. But I'd say 97% of the time, I'm out before the dark zone. I don't want my heart beating crazy in the last 2 minutes because I see the market turning around. I don't want to risk being able to get out at 90 bucks, lose the whole thing because I'm greedy about a few more dollars. Okay? Like, that's ridiculous. So, something I really want you to kind of pay attention to here. Hold on to your questions for just a second, because a lot of people do not understand this aspect of binaries, and this will really help you. And we haven't really covered this in a while, so I want you to really understand something. Okay, let's look at this binary let me look at something real quick here. Right here. Notice this binary right here. It's priced close to 50 bucks, right? I can buy it, sell it for 42, buy it for 51. Okay. Notice these, they're down at 5 bucks. These are up at 90 bucks. Well, what do we know about a binary at expiration? It's either worth 0 or 100. So notice this one, 99, is really close to 100 already, right? Notice these for 5 bucks are really close to 0 already. Now when we start looking at something kind of right in the middle around 50, what's this strike price? 0883. Okay. Well, let me hold on. Let me see if I can give you a different example. I'll find one that's going to be a better example so you really understand this here. Okay. Right here. I can buy it for 56 or sell it for 47, 40. So around 50 bucks average, right? Well, where's the market? 117.60. And where's the strike price? 117.58. So the strike price is very close to where the market is right now. So the binary is priced around 50. Okay, well, if we know at expiration a binary is either 0 or 100, well, before expiration, like right now while we're waiting, if the market price is right at the strike price, then we don't know yet what's going to happen, right? If your strike is 100 and the market's 100, well, the market could go up one tick and it expire profitable. It could go down one tick and it expire not profitable, right? It's kind of right in the middle. It's kind of right on the fence. It could go either way. It's 50-50. Does that make sense? It's kind of 50-50 right in the middle. Is it going to go one way? Is it going to go the other? See, 117.62 is the strike. 117.61.5 is the market. 43, 50. It's kind of right at 50. It's kind of a 50-50. Does everybody understand that? It's kind of right on, straddling the fence. It could go either way. That's why it's priced right around 50 bucks. Now, why do you think this one down here is priced at 95 bucks? It's priced close to 100 already, right? Well, why? Well, because this strike price, this contract says what? I think the dollar yen will be above 117.38. 0.38. Well, where is it now? 0.65. So it's already above 0.38, isn't it? It's quite a bit above it, right? So that has a very high probability of staying above it, being above it. So this one's priced a lot higher. Does that make sense? Okay, everybody understands why that's priced higher, right? Now, is there a whole lot of reason you'd want to buy something for $96.25? Because what's the most it could be worth at expiration? 100 bucks, right? I mean, if I went in to buy this, I'm risking $95.50 to be able to make what? 4 bucks. Don't know that I really want to be doing that, right? Okay. Why do you think this one up here is only priced, or let me give you a different example. Why do you think this one right here is only priced at $9? Well, because what's the contract say? That the market will be above 117.75 at 8 o'clock. 8 o'clock's 15 minutes from now, right? So it's going to be above 0.75. Well, where is it right now? 0.62. The market's got to move a pretty good amount in the next 15 minutes for this to expire true, correct? So where is it priced at? Way down there closer to 0, right? Remember what we talked about, probability and midpoints? I mean, there's not even a sell side, so call it 0. Well, 10 and 0, what's the midpoint? 5. So there's like a 5% chance of this expiring in the money, right? So it's priced very low. Everybody understand that? So you see why some of these that are way far out there are priced really low. You see some of the ones where the market's already above it, why they're priced so high. And then you see when the strike price is right around where the market is, they're going to be right at 50. And then anything below 50 is going to kind of go down, 40, 30. Anything above it. Does that make sense? Why there's so many different ones and why there's different prices. So if you look here, these that are around 50, you know that's right about where the market is. All these other ones underneath it are further and further already in the money. These ones that are cheaper are a little farther away and the market has to move. Does that make sense? We're going to get into those, we're going to get into that a little more detailed here in a minute, but does that make sense in a nutshell? Okay, so let's look at a quick example here. I want to teach you what's called the price ladder. This is the price ladder, the bid and offer. Notice they go up, 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 right? Prices go up. So look at these strikes. 117.58, 117.54, 117.50. This is the dollar yen. Each strike is what? 4 ticks difference, correct? Okay. If I bought this one right here, okay, right now the market's at 0.58. If I bought this, saying the market's going up, and let's say the market went up 4 ticks, meaning it moved up basically a whole strike in the money. Does that make sense? It moved up a whole strike, meaning another 4 ticks. Well, if I bought this one and the market went up 4 ticks in the money, in my direction, okay, let me back up. I'm looking at this one to buy, but look at the one underneath it. I'm looking to buy this one at 0.58, but what's underneath it? 0.54. So this one right here at 0.54 is what? 4 ticks more in the money than the one I'm looking at here. Does that make sense? I'm trying to say that right. Does everybody follow what I'm saying there? If I want to buy this one at 0.58, this one that's 4 ticks down is 4 ticks further in the money already, right? It's 4 ticks deeper into saying, yes, the market will be higher. Everybody follow that? I don't know if I'm really saying it or explaining it right. Okay, I think you got it, but let me just make sure. Let's look at a chart right now. Okay, if I could buy a binary right here, right where the market is right now, at 0.57, or I could buy a binary down at 0.53. This one down here that's at 5.3 is in a sense safer or further in the money, right? If I'm buying a binary here, I'm saying the market will be above here. If I'm buying this one saying it'll be above here, it's pretty close, right? This one is a quote unquote safer feel or whatever. So if I'm buying a binary, the binary below it is even more true or more further in the money already with what I'm saying the market will do. Does that make sense visually? So, okay. So if I buy this one, the 0.58, well, the one below it is 4 ticks more in the money already, right? But if I buy this one, the 0.58, and the market goes up 4 ticks in my favor, this one should then be priced. When that happens, this one should be priced how this one is currently priced, right? Because if I buy this one and it goes up 4 ticks in my favor, it's now kind of like what this one is now. Does that make sense? Let me know if that I said right there doesn't make sense to anyone, because I want to make sure that you got that. So right now, if I'm looking to buy this one below it is 4 ticks higher in the money. That's why it's different priced. So if I buy this one and the market goes up 4 ticks, well, this one will be priced how this one is now. And this one is now would be priced more like what? The next one that's 4 ticks more in the money. Does everybody follow that there? Okay. So if I buy this one and the market goes up 4 ticks, meaning the market goes up 1 strike, what would it maybe be worth if the market went up 1 strike? Well, if I buy in this one, the market goes up 4 ticks, it's going to be priced how this one is priced now. Okay, does that make sense there? So it's what's called the strike ladder, meaning, okay, if I buy this one and the market goes up 4 ticks, and therefore this binary is 4 ticks in the money more, what can I sell it for? Well, I could sell it for this. If I buy this one and the market goes up 4 ticks, I could sell it for this. If I buy this one and the market goes up 4 ticks, I can sell it for this. You can see, you can estimate if the market's going up or moving, what can you sell it for? All right, here's a different example. If I buy this one for $35, $36, and the market goes up 4 ticks, I can sell it for $56. Look at on the sell side. If I sold this for $13.50 and the market goes down 4 ticks, I can buy it back for this. If I sell it for $23, I can buy it back for this. All right, did I lose anybody here with that? Okay, because that's the strike ladder. So you can see, all right, if the market's going in my direction and I buy something for a certain amount, how much does it have to move for me to make a certain amount of money? Okay, so if I'm buying and the market's going in my favor, 4 ticks, I can get out of it for this. If I'm buying this one, it goes 4 ticks, I can get out of it for this. Okay, so if I buy here and it goes 8 ticks, I can get out of it for this. That kind of shows you there the price movement. And notice the closer you get to expiration, you're going to have bigger moves there. You see that? When you're just down to a few ticks difference, it can be quite a bit. When you've got a lot of time to expiration, it might take you a couple strikes for you to get something for 60 and get out of it at 80 or so on. All right, does that make sense? Does everybody understand what I'm trying to show here with this strike ladder? Okay, so now that we've got that, I want to show you one other thing here. We all know that binaries at expiration are worth 0 or 100. Okay, we know if the price is right in the middle, it's worth about 50. And then we've got, you know, other prices in between there. It's not just 0, 50, or 100. We got, you know, 6, 7, 11, 21, 37, 56, 74, right? Okay, so hold on. I want to show you. Okay, so let's say that I am wanting to, let's talk about some different strategies. Let's say that my particular strategy is a directional strategy. What do I mean by that? Well, whatever strategy or system that I'm using, I'm expecting a decent move, okay? Like, I'm expecting the market to move a decent amount. All right, let me just pull up an example on a chart here. All right, this is a little bit different. This is from a webinar I did the other day. This is just kind of showing what we call our iZone sharpshooter system at Apex. Don't get all overwhelmed by this, but basically, see these green zones down here? These are what's called institutional zones. When the market comes down and it hits one of these zones, and then all of our indicators here turn green, well, what do you think that means? Buy or sell? Yeah, buy, right? Because the market's come down to a strong, support level and everything's turning green, saying buy. We get in and buy. See the time here, 9:35. Over here you see the prices. We've got a pretty good up move right here, right? This is on the NASDAQ, all the way from 43.35 all the way up to 43.57. That was a good move, right? So I'm expecting a good move in the market, okay? A directional strategy, trend trading, okay? Well, let's look at something. When a binary gets down closer to 0, or when a binary gets up closer to 100, it starts to move slower. What do I mean by that? Yes, at expiration it's 0 or 100, but before expiration it's moving all over the place price-wise, right? But the closer it gets to 0, it's going to move slower. Closer it gets to 100, it's going to move slower. What do I mean by that? Well, follow me here. Hold on questions for a second. Follow me here. Okay, if I bought this one for 12 bucks and the market moved in my favor, one strike. All right, in this example, they're 20 ticks. So if I bought this one for $11.75 and the market went in my favor by one strike, what could I sell it for? $14.75. What is that? Like $2.50 approximately here. I mean, these prices keep changing, but like $2, $2.50, right? Everybody see that? So what if I'm possibly expecting a 20 tick move in the market? Is that the best one to buy? Because if I get 20 ticks, say I'm expecting some kind of 20 tick move, or my trend trading strategy is set up for a bigger move. Well, if I get that one, I mean, it's pretty cheap. I like that risk, but out of a 20 tick move, I'm only going to make like $2, $2.50, right? All right, well, what's the next one? If I buy this one for $20 and it moves a strike for me, I can get out of it like 26 bucks. Okay, so right there I can see that binary is going to outperform this binary. Does that make sense? Everybody see what I mean by that? All right, because I can make about $7 with that. Well, look here, this one at 33 and the market moves up, I can get out of it 43. Okay, so I get about a $10 move there. Here for about 50, I can get out of it for 60, 25. Okay, a little over 10 bucks there. What about this one? If I buy this one for 81 and the market moves 20 ticks, what can I get out of it for? Only 85, like $4. So, okay, what about this one for like 92.25? I can only get out of it for like 92. And then notice these, when they're getting closer to 100, look, got 86, 92, 94, 94. So from this point right here, not a lot of movement. You're not gaining a whole lot for movement, right? Or from like this area right here, you're not gaining a whole lot of movement. Where do you get the most return? Like from, say, the 30 to 60 or 30 to 70 range, kind of in the middle there. Does that make sense? Because think about it this way. If you buy something for 30, see here the market, see 0.80. Let me show you a different example here. What happens if you buy something? Let me put it on a chart, okay? Where's the market at? Market's at 0888. Well, if I buy something way up here, for 10 bucks, what does the market have to do to get up there? What does the market have to do for this $10 to really be profitable in any way? The market has to move up. And first of all, the market has to move. Can the market just stay where it's at and kind of tweeter here a little bit? If the market just tweetered here a little bit, what's happened to that $10 binary? It's becoming worthless, nothing, right? So the market has to move, and it has to move where? Up. Has to. Or else that's just going to be worthless, right? Okay. What if I buy a binary like right here for 30 bucks? And the market moves up to that level and hits that level. Therefore, my strike price and the market are the same level. What do we know that a binary is approximately worth when the strike price and the market price are pretty much the same? Can anybody answer that? Yeah, 50 bucks, right? So, doesn't it make sense that if the market moved up to here, that means it is moving up. So I bought this one for 10 bucks. The market moved up a little. Maybe it went up to being worth 12, right? Remember how we looked at that one example? I can buy this for like 10, but if it moves up a whole strike, I can get out of it at like 12.50. It only went up a couple of bucks. Well, you see that because, yeah, the market's coming up, but not a whole lot. That makes sense, right? Why I buy it for 10, it might only go up to 12. Because, yeah, the market's coming up, but nowhere near far enough to really affect that one. But can you see why if I buy this one for 30 or 35 and the market just pops up a little, why it's worth 50? And then if it popped up just a little bit more, why it might jump to 60 and 70 real quick? Because what's happening when the market goes past this level? Where does the price have to go towards? 100, right? That's why these that are, where's the market? 117.53, 117.50, 117.46, 42. The market's already passed all of these prices, right? So why do you think they're at 63, 72, 81? Because when the market gets above a strike price, it's got to go from 50 up towards closer to 100. Does that make sense? Am I losing anybody here? So if I'm looking at a longer term trend, or I think the market's going to move a good amount, do I want to go and buy something for, 79 and let the market move a good amount so I can sell it for 84 and make $4? Or do I want to look at the one where I can make more? Or do I want to look at the one where, okay, 82 to 86, $3? No, I don't like that, $3. Okay, here, 29, 47 to 57, okay, $10. And guys, these can change all the time. Right now, there's not a lot going on with the markets. There's not a lot of movement priced in here. You'll find times where there's differences of, $15, $20 with some of these, especially closer expiration. We looked at those. But it goes to show you, if you're looking at that longer term move like that, you don't want to just take a couple of dollars here, do you? You don't really want these top ones or bottom ones all the time necessarily. You want to look at these middle ones to know, how is it going to move? What can I expect with a one strike move? And I've seen a lot of you guys say, oh, I've got this great system. Like I got this trending system where the market's moving up, and John, the market moved up 40 ticks. 40 ticks in my direction. I was right. I said it was going up. It went up, and it didn't go up just a few ticks. It went up 40 ticks. It moved massively. But I only made a little bit on this binary. Why? Well, did you buy this one? Did you buy this one? Did you buy one of these at $6 because you're like, ooh, I like that. That's really cheap. But then it moved up, and there's no things here. Oh, I bought it for $8. The market moved way up, and it was only worth 7 or 18. Like, I didn't make a big move. Did you choose the right one? Did you look at the right binary? Okay. And some people say, well, I bought a binary and it started to go up, but my profit and loss still shows negative. Okay, well, did it go up a whole strike? Okay. You're answering your own question. I'm not sure your question. We've answered that several times here. If I buy this, okay, this particular binary, I can sell it for this. But yeah, the market might start to go in my direction, but did it go enough in my direction to get up to this next level here to make 46 become 56? Okay, just because the market starts to go up in your direction, where is this price? Just because it goes up a couple of ticks, is this price you can sell it for above or below where you bought it at? Okay, does that make sense? All right, so does everybody see that? That's what we call the price ladder, okay, where you need to be able to know, and you can kind of see it really easily for yourself of with this kind of move, that's what kind of profit potential I can expect, okay, because sometimes it's hard to understand, well, how much can I make? Well, you can kind of see it there for yourself, okay? So real quick, we know that when the strike price is right close to the market price, a binary will be worth how much? About $50, right? That's what's called an at the money binary. Let's look at something right here. Dollar yen. We've got binaries tonight, right? That expire at 8 p.m. or 9 p.m. Okay. And let's look. What is this strike right here? 117.50. Where's the market? 117.51. So the market is pretty close to the strike price that's coming up tonight at 9 p.m. And you can sell it for 48, buy it for 57. See, close to the 50s. What about at 11 o'clock tomorrow morning? Well, 117.60 is the closest binary to 117.52, not far from 50. What about at the end of the week on Friday? Tonight's Monday. What about Friday? What's the strike price? 117.25. Okay, because these are really big. Market's at 117.51. That's the closest binary. Around the 50s. So it doesn't matter if it's an hour out, 12 hours out, or at the end of the week. If the strike price is close to the current market, it's going to be about $50. Okay, that's what's called the at the money binary. Okay, now we do also understand, so we understand what at the money binaries are. They're around $50. It's kind of still on the fence, 50-50, could go either way, right? And what are in the money binaries? Well, in the money binaries are these ones that are priced a little bit higher. Okay, I'm going to mix this up. Let's talk about out of the money binaries. Out of the money binaries are these ones that are priced really cheap, right? And what are out of the money binaries? Well, let me clear this off. Let's make sure we understand it here on a chart. Okay, so the market right now is at 117.53. If I could buy well, let's just look. Dollar yen for 9 p.m. Let's actually do this live here. Dollar yen, 9 p.m. This one right here, it's priced at $11.75 for me to buy it. All right. What's the strike price? 117.74. Okay. On our chart, where is 117.74? It's actually so far up there, I'll have to scroll down to get it. Okay. So it's way up here, 117.74. So why do we think this one is so cheap? Because the market's way down here at 0.53. It's like 20 ticks away. It's the only way for this out of the money binary to be profitable. I'm not even saying for it to expire in the money, but for it to start going up in value, is the market has to move. And it has to move that direction. Right? Has to move that direction. Everybody understand that? So it's called an out of the money binary, where the market it's priced really cheap. The market has to move way up there by 9 p.m. So why would you ever want to use out of the money binaries? Now, I'm not saying don't ever use them. What do we like about them? Well, I love that I can buy this for $10.50, only risk $10.50, and maybe make $89.50, right? Or, you know, hey, I think the market's going to move quite a bit, and maybe I buy it for 10 bucks, and maybe the market goes up quite a bit, and I sell it for 60. So I make 50 bucks out of it on a $10 risk. We all like that, right? So I'm not saying to never use out of the money binaries. I'm just saying if the market is really choppy and it's just kind of flat and bouncing and volume is real low, you don't really have any expectation of a big move, would you ever want to buy something way out there? Does that really make any sense? Is the market giving you any reason to tell you, yes, get something that's further out, I'm headed that direction? But there's no volume, it's just real choppy, you don't have a big trend entry on your chart, it's just kind of throwing your money away to randomly buy something cheap out there, right? Because with out of the money, you have one option. The market has to move, and it has to move up there. Everybody get that? That's an out of the money binary. So we'd want to use out of the money binaries when we are maybe expecting a bigger move, or when we're just trying to take advantage of some quick scalps. If you want to watch a video on scalping, check out the one I did last Monday. I'll show you where you can find it. That's an out of the money binary. What is an in the money binary? Well, what's this one right here? 117.50. And it's priced around 75 bucks. So where is 117.50? Okay, 117.50 is right here. So if we buy this binary for 117.50, what are we saying? We're saying that the market will be greater than 117.50. The market's already greater than 117.50, right? And therefore, that's why it's priced around what? About 72, 71, 75 bucks a minute ago. Because it's above 50, it's already above where the market is. Now, remember with this out of the money binary, the market has to move. Do we need the market to move for this binary to win? What if the market just stayed flat right where it is? Would this binary win or lose? Right, this binary would still win, because all we're saying with this binary is the market will expire above here. So the market's already above here. So if the market just stayed flat, this binary would still win. what would happen at expiration if we bought this binary for 70 bucks and the market went up? Would that binary win or lose? Okay. What happened if the market came down and expired at 117.51? Would this binary win or lose? Right, you still win, right? Because we're simply saying what? That the market will be above 117.50. So with this cheap out of the money, we only had one option, right? The market to move in that direction and get up there, move a lot, right? We only had one option. Well, with these in the money binaries, meaning when you're getting them below the market, the statement is already true, the market can do what? Go up, stay flat, even come down against you, but as long as it doesn't come all the way down, it can still win. So with out of the money binaries, you got one option. Market has to move that way. In the money binaries, the market can move 3 different ways and still potentially win. Correct? Does everybody see kind of that advantage there of the in the money binary? Because it's already a true statement. It gives you a little room for the market to move. So you see that, right? Okay. Now, what do we, so a lot of times here's what I'll see. People say, oh, okay, maybe those real cheap $9 ones are no good, but what about this one? What if I bought this one for like, around 25 bucks and, I could risk 25 bucks and maybe make some money. Okay, I don't mind risking 25 bucks. If I lose 25 bucks, all right, cool. Okay. I can handle a $25 loss if I'm wrong. What do we talk about midpoints? 14, 23, 14. Where's the midpoint here? About 20, right? 19. So what is the percentage of probability of this expiring in the money, this contract? 17, 18% probability? Everybody follow me there? About 21 right now, okay, or a little less now maybe. So you're okay risking about 25 bucks. You can handle that. It's not going to kill you if kill your account if you lost 25 bucks. You'd be like, oh man, but it's not going to kill you, right? So you're like, oh, I'll risk 25 bucks. But you go into that trade knowing there's like a 19% probability, right? Okay. What if you got this binary right here? What do you not like about this binary when you start filling out this ticket? What scares the heck out of you and makes your heart beat and keeps you from pressing the button? That number right there, right? That's what you don't like, risking $77. Am I wrong? Am I right? That's where some of you with these binaries get like, ooh, I don't want to risk 77. Yeah, let me just go back there. I don't mind risking like 25. Let me just risk 25. I'll do that because it feels better, right? What do we know about your $25 risk binary here? What's the probability on it? Like 19%. What's your probability on this one? About 70%. And why is this one such a higher probability at 0.54? Well, because the market's already above it. and you've got more options. So how do you get the best of both of those worlds? You like this probability. You like a 70%, anyone likes a 70% probability as opposed to a 19% probability, right? We all like that. What is the difference that we don't like? We don't like a $75 risk compared to a $25 risk, do we? Everybody follow me there? Everybody agree? That's why we're tempted to choose one of these cheaper ones. We'll take a $25 risk. But we sure like the probability of this one. Okay, let me clear this. How do you get both? All right. So, when we were looking at that example, we were looking at what? The 117.54, right? So, if I wanted to buy the 117.54, I like that because the market's already above it. The market can go up. The market can stay flat. The market can come down, but not all the way down. So I bought it for 75 bucks. I've got a 75% probability. I like that. But I liked this one way up here because I'm only risking 25 bucks. What is the better probability trade here? Which trade has the higher probability of winning? This top trade or this bottom trade? I think we all know the answer. The bottom trade, right? And everybody understands why, right? Okay. But we liked this trade because we were risking how much? 25 bucks to buy it, right? We don't like this trade because we're risking how much? 75 bucks. Everybody follow? Okay. So with this trade, what do we like about it? Market can stay flat, market can go up, or market can come down. As long as it expires above, I'm still good, right? Okay. So I like this trade because it's a 70% probability. But I like this trade because it's a $25 risk. Let's back up. If the market comes down, because remember, the market can go up, stay flat, or come down and expire above. But before expiration, I'm not talking about expiration, if the market happens to come down all the way, boom, to my strike, right where I bought, and hits my strike, what is that binary going to be worth? Not at expiration, but before expiration. What do I know that when my strike price and the market price are the same, or right at the same, what is that binary approximately worth? 50 bucks. So, if I wanted to have a trading plan that says, if and when I want to do these in the money, $70, say, I got a 70% probability trade. The market can go up, stay flat, come down. But if the market comes down and hits me, and hits my strike, I get out. What if I define those rules for my trading plan? If it comes down to my strike, I get out. I bought for 70 or 75. If it comes down to my strike, I get out. How much do I lose approximately? 25. What was I going to lose when I bought this really low probability one up here? 25. So remember, we all say, ooh, I like that $20, $25 risk. I'll do that one. Oh, I don't want to risk 70, but I like a 70% probability trade. I like a binary that gives me options. I like a binary that can go up, stay flat, go down. So how do I get this type of $25 risk, but on a 70% probability trade? And that's how I do it. Is I know that if the market comes down to my strike, it's worth about 50. So if I can buy something for 70, 75 bucks, I've got that strike that's below the market, gives me some room, 70% probability trade, but I'm going to limit my risk to 25. So either way, whether I take this trade or this trade, I'm still only risking 25 bucks. What is the better trade? What is the higher probability trade? Yeah, the bottom trade. And sure, yeah, you'll always have the temptation to keep it because it could bounce back up. Yep, or you could lose 70 bucks. So if you follow rules and you have a set rule, whatever your strategy or system is telling you, hey, the market's headed up, okay? Or maybe, whatever you're using, hey, market's heading up, okay. It might come up this level or this level or this. Not sure how far it'll go. I could get, even though it's telling me to buy here, I could get a binary down here. Give it some room. Or maybe I want to buy a cheaper one. But does everybody understand that concept right there? You can risk 25 bucks either way, but have a higher probability trade. You just have to make that work, you have to get out when it exits. You have to exit when it gets to your strike. Okay? So when it comes down there to your strike, you have to get out of the trade, just like we showed earlier. If you're in a buy, you got to click it and sell it and get out of it. Okay? So yeah, there's no automatic stop losses inside of Nadex. Okay, you just have to click it and get it out. Get out of it like we showed. So everybody understands that particular setup there of how you combine the lower risk pricing with a higher probability trade. Okay? And those in the money trades like that, those little higher probability, those are great trades to do, like, when there's just choppiness going on in the market. It doesn't look like there's a clear trend up or a clear trend down. It's just kind of choppiness. Maybe you get a binary down here, for it to expire. Maybe you get it for 70, 80 bucks. Okay? Now the other thing, I'm not telling you to always use those. It's not bad to use maybe one of these 24 or even like these $40 ones. See, like these that are 37. What if a market goes up 2 strikes? You can get out of it at 67. See that? It doesn't have to move a ton. You can get in it at 40, goes up to almost 70, get out for 30 bucks. Let's say you are using a trending strategy where you've got, something telling you, hey, buy, the market's going up. So maybe you want to buy a $40 binary, let the market make its move and let that $40 binary go up to 60, 70, 80 bucks. Get out. Okay? You can do that. Now, one other thing here. Like I said, let's just say that you have a smaller account and you're only doing one trade at a time. And let's say you buy a $40 binary and the market goes up, a couple of strikes, and you can get out at 67 or get out at 81. But you're like, oh no, I want to hold on to it. What if it keeps going? Look what happens after that. If it moves up a whole other strike, you only go up to 89. If it moves a whole other strike, you only go up to what? 92, 92, and then 95. Why are you going to hold it for all this big movement just to make a couple of more bucks when you could get something at 40 and get out of it at 72 or 80 and be out? Why are you going to hold on to all this other possible potential move just for a difference of 91, 92, 95? You see that? The market, remember we talked about when it gets to the top or bottom, it moves so slow, but so many people will hang on to it just to get those few extra bucks, when the real movement is like here to here, get out, here to here, get out. Why are you holding on for a couple more dollars for 4 ticks, 4 ticks, 4 ticks, 4 ticks, just to get from 92 to 95? You can kind of see it there where it starts to slow down, and get out. Take your money and get into another trade that can get you from 35 to 70. You know what I mean? Another trade that gets you from 57 to 80, and get out. Don't be holding it all the extra time for just these little couple of dollars and then risk the market turning around on you. Does that make sense? Everybody understand how you can kind of get a little better picture by looking at this price ladder of what kind of movement and money to expect, and when you should probably just get out and take your money and run? Why are you going to hold on for just a few more dollars? You know, if you've got in for $30 or $40 risk and you made 30 or 40 bucks, get out. Don't risk all that 40 plus the profit of 40 just to get 90, 75 to 92 to 95 in 12 ticks. It's not worth it. 3 strikes got you $3. Here, 3 strikes got you 50. Okay? Does that help at all to understand a little bit more about how to choose the right binary? You can't just go in and randomly pick one because you like a cheap price. And don't just randomly pick one because you think it's so far in the money it'll be great. And don't just randomly hold on to them. Actually look at this and see what you're doing. See what is the best binary to pick for my strategy. Where's the best place to get in to get a good risk reward and percentage? And where's the best place just to say, I'm done. I got in at 45, it went up to 82 or 91. I'm not going to stick all this stuff out. Get out of it. Get in another trade. Don't tie up your money and risk it turning around. So, you know, kind of basic stuff here for some of you. You might have already known this. Some of you might have never realized that's how it worked, or looked at that, or really looked at, oh, I was just buying these little cheapy ones out here because I love, you know, when it says, you know, risk 22 to maybe make 78. Those are great odds. Let me just buy it. That's just gambling. That's just gambling. You have to have a reason, something on your chart telling you, hey, we're about to get a big move. Okay, you might get a big move in the market. What am I doing here? I'm getting you the wrong. Yeah, you know, hey, we might get a pretty big move, set up for a big move. So it's okay right here to maybe get an out of the money way up here because the market may get up there. Okay, have a reason for it. Have a setup on your chart for it. Not just randomly going and picking something because it's cheap. That's where you find yourself just, man, I've tried these binaries, but I don't seem to make much with them, or market moves. Hey, you know, somebody said that earlier in the webinar here on the questions. They said, you know, I've had the market move in my direction. It's starting to go up, but I'm not really making anything. Well, yeah, because it's got to move way up there. Okay, so check those out. Okay, let's just wrap up here. If you go over to our website, apexinvesting.com, a couple things here. A couple of you are asking some more information on some of those charts I showed you. You can get some information about that here under the, go right here. Step number 3, iZone Sharpshooter. That'll explain what all those charts are. Okay, the ones I was showing you about with those big moves and what all that. You can watch everything you want about it right there. Walks you through some charts, how we use it, entries and exits, like everything's right there. But okay, some of you came in late and are asking about the webinar. Let's see here, Chan, you can get some of that information here and right here, okay? And right here, you can try it out for like nothing. Right here under this tab here, Help Desk and Forum, it's called Trading Questions Forum. Okay, if you go there and you scroll down towards the bottom, it'll say Watch Webinars here. newest webinars. That's where tonight's webinar will be posted. I'll have it up here in about 30 or 40 minutes, and it'll be right at the top. It'll be Apex Monday. It'll be called Monday Nadex webinars with today's date, January 18th on it. Okay. So make sure to, if you want to rewatch it, that's where that will be. If you want to get some more information about binary trading, you can also go to that same section of watch webinars here, right here, Nadex binary webinars, a whole collection on scalping with 5-minute binaries, finding the right binary, binaries 101, in the money and out of the money binary strategies, nighttime trading with binaries, how to do strangles on 20-minute just all this is free for you. Just go to apexinvesting.com, get a free username and password, get access to all of the free education there on the many different ways to trade binaries. Okay. Let's see here. Hyundai, everything, any order with Nadex is always a limit order. Okay. Every order with Nadex is a limit order. What does that mean? Well, if I were to click this right here, I can buy this for 67. If I said, okay, I want to buy one for 50, okay, buy for 50. Okay, well, my order was received. Where is it? It didn't execute, did it? Well, if I go up here into working orders, boom, there it is. It's working. It's sitting there waiting to execute at 50. Why did it not execute? Well, because I said I wanted to buy it for 50, but the price is not down at 50 yet, is it? It's a limit order. So I said 50, that's a limit. Buy it for 50 or less. I won't pay for more than 50, okay? But that working order is sitting there, okay? And it's good till close. I mean, it's good till 9 p.m. when this expires. This working order will stay working until this binary expires at 9 p.m. or until it fills when the price gets down to 50. Okay. Let's see here. Do you ever combine the two binary examples mentioned? Yep. That's a whole kind of other topic here, but that's right here under strangles and butterflies, where we combine two different binaries, buying and selling a binary at the same time, buying and selling two different binaries. You can watch this webinar right here to see some of those strategies as well. Those are some of my favorite binary strategies, actually. Okay. Let's see here. Nope, Greg, wasn't me. Let's see here. Okay, guys, I think we've got most of those questions answered. Yep, most of that stuff is on the site right there. Okay, all the different binary webinar strategy systems, whole kind of wealth of library right there for you. Okay. All right, you too, Heinz, I appreciate it. All right, guys, I appreciate you joining us tonight. If you have any questions, just hit us up over here on the Apex website. Again, under Help Desk, you can just submit a ticket here if you have any questions or need a recommendation of which training video to watch. A lot of information here, right here under Elite Education. If you go down right here to Additional Education and Other Courses, Binary Strangles, Butterflies, Sharpshooter, a ton of different courses, different ways we trade Nadex binaries and spreads. Yeah, Garrick, yeah, right here under the Help Desk or Forum, this tab, right here to Trading Questions Forum, click that. That'll take you to the Apex Forum. And then you scroll down towards the bottom, and it will say Watch Webinars here. And I'll put tonight's under Newest Webinars, or for the whole library of webinars right here, Nadex Binary Webinars, Nadex Spread Webinars. There's a whole collection of getting started with Nadex. Some of you are asking questions about the platform and orders right here, Nadex Platform Tutorials. You can click this, how to use the platform, the binary price ladder, the layouts, right here, Nadex Platform Order Placement, understanding the settlement emails, anything you would need to know there about how to use the Nadex platform and navigating through it. You know, some of you are asking about limit orders and market orders, all that information right here. Like, and this is all free to you guys. Anything you'd want to know here about how to use the platform is there. That other section right here, getting started with Nadex. Bunch of interviews there about Nadex, how to start day trading. You know, why Nadex binaries compared to other binaries that are out there. How do you understand the underlying markets and price movement? What are the different trading hours and contract specs for Nadex? Getting started with it's all just right there for you. So make sure you hop on and get that free demo account with Nadex. Hop on to apexinvesting.com, get your free username and password. Take advantage of all this free education. And like I said earlier, hop on over, if you haven't done it already, to facebook.com/apexinvesting. Like us and follow us on Facebook. Ton of good information about, and once you like us on Facebook, it'll say liked. Click that drop down and choose all posts. That way you'll get notified of all our new posts about new trading, new systems, new strategies, new training webinars. Just a great place to stay up to date with anything going on. Big news announcements you need to be aware of for trading, Nadex holidays. So check us out there, like us. Let us know if you have any questions. Otherwise, we will look forward to seeing you next Monday night. And like I said, we do these every Monday night at 7 p.m. Eastern Time. And look forward to you joining us, or like I said, hit us up over there with any other questions. Nick, no, Greg, I'm not familiar with who that is. I've only always been here with Apex, going on about 3 years now. So, all right, guys, thanks for joining us tonight. Hope everybody has a good evening, and we'll look forward to seeing you next week. Thank you very much. You too. Thank you. Have a good one.